Hello, hello, good evening. Welcome everybody in the chat, and welcome to the 300 people already in the chat with us here. Today we're going to talk about a very interesting topic, and I have pretty much the smartest guy in every room. We got Trey here. Trey, you're going to hear about his background from him in a second because it's beyond impressive. Yeah. So Trey, so I don't butcher your background because I don't know which parts to highlight. I mean, there's so much. Do you want to introduce yourself? I mean. Um,
Yeah, Trey Taylor. I run a family office called Threadneedle, which represents three generations of my family wealth, and we're preparing for the next three generations. I took a law degree from Tulane early in my career. Used that to get into venture capital. I was one of the first employees at WebMD. Spent some time at WebMD where we did some really big sort of transactions, $1 billion here, $1 billion there, that sort of thing back in the days of the first internet bubble. I left there, went into venture capital, made some really great investments, had a good track record, and all of that came to a screeching halt on 9/11. So then I had to go get a real job and join corporate America and ended that phase of my career at AOL doing divestitures. And then left that job to come home to run the family business, which I've done for the past 15 years. And so we now have a family office where we have three different verticals. We have a PE vertical in the financial services space. We have a real estate vertical in commercial development and buy and hold and syndication as well. And then we do early stage investing in tech companies through funds.
somebody just recapped you in 3 words. Four, sorry, four. Chris Stone says Trey is a stud! Exclamation mark.
There
This is
are
a really
people
good
that have
recap.
opinions to the good and the bad on that. Yeah.
Yeah, I mean, I have haters too. I mean, but this is like a good recap of you. Listen, so guys, I met Trey in Clubhouse. I was blown away by. I mean, I'm done hyping you up. I mean, they're gonna hear it in a second. So, Trey, what you didn't say in your introduction that you also a really good macroeconomic kind of. You have a lot of theories about the economy, and I actually want to ask you. I want to start off with the most important question. Just why we're here is, I'm getting asked, this whole story of the old lady in the grocery store. There's many variations. There's Russian versions, American versions, but basically the euphoric kind of overwhelming retail investors kind of penetrating the stock market is that's we were taught that it's a bad sign. And if I take a look at the economy right now, right, we're seeing job loss at a certain level. We're seeing somewhat of an inflationary behavior, and while the market is, market cap to GDP is insanely high. So, kind of, if I'm coming out of business school or even microeconomics 101, I'm saying, well, this is leading up to a crash, right? But not necessarily. I mean, what do you? I'd love to hear your opinion on that because I think you have
I,
really
I,
interesting opinions.
yeah, I think you and I may have slightly differing opinions on this. Look, this is my view of things. Um, just in the US, we have added $6 trillion of liquidity in the past 11 months. Every one of those dollars is in competition to find some home to make some level of return. Okay, so immediately we see the stock market rising despite the fact that sales are off. Revenues are off, earnings are going to be off because they're derivative of revenues, that sort of thing. We see the same thing happening in real estate, where homes that you could buy 12 months ago would sit on the market for 4 months, and you could buy for $300,000 are now 350, 370, 380, and they sit on the market one day, and you have four offers. Valuations in the early stage community that we do investing in continue to creep up as people try to over term sheet each other to get in there. So every asset I can find, crypto is another one. Crypto was 30,000 bucks for a Bitcoin a couple of weeks ago. It's 50, 55,000, something of that nature today. IPOs as well. Airbnb went out at $68 a share. It's $212 a share today.
Yep.
We all have money. It feels like we all feel very rich because our assets are inflated in value.
Yep.
And so that makes us want to buy more and keep buying more. And so my theory is that it can't last forever, but I'll never make the mistake of telling you that on June 29th is the day that it's going to all come to a stop because I don't know that.
So here's what. Let me paraphrase you and tell me if I'm hitting it right. Um, so, by the way, people have asked me who you are. I'm going to put a link to your CV and I'm going to pin it to the top of the comment section just so people can actually check out your profile because it's hella impressive. And I'm using financial terms here. So I just pinned it to the top of the comment section. You can go ahead and check Trey's CV. So what you're saying, and allow me to paraphrase you for a second, and you can tell me if I'm right or not. You're saying, well, it's obviously not really sustainable. It's a game of musical chairs. At some point, the music will stop, but nobody freaking knows when the music stops. It can be tomorrow, or in a year, or in 2 or 3 or 4 years. So nobody really knows when. So it makes no sense to stop dancing, so to speak, right?
That's exactly it. Yeah. The music is now being paid or being paid solely because it's being paid. When we stop paying it, I think the music, I don't know, does it stop? But it definitely slows down and
Yeah.
people begin to run for the exits. Yeah.
By the way, shout out to the 800 people, 900 people in the chat. Since I posted your resume, they're coming up at the faster rate.
Oh no, it
um,
must be the Emory people from Atlanta.
you told me a story. I don't know if tell me if you're comfortable. You told me a story in Clubhouse about how you pulled your money from a hedge fund because of a certain answer you got about that specific topic. Do you want to share that, or we can move on to another question?
Yeah, no, I can share that. I won't mention the name of the
Of
fund, but
course.
because I think many of them are in this kind of zone. Look, even though I think the music is going to stop or slow down at some point, that doesn't mean that we don't have the ability to invest into the tailwinds of that coming into the market. And so, one of the hedge funds that we participate in is a real estate based hedge fund, largely multifamily oriented. And when the pandemic started, they sent out a shareholder letter that said we're going to freeze redemptions. We don't want anybody sort of pulling their money out right now, and we'll open it back up when it's time. And we're going to take a different investment stance as things until we see what really happens in the market. This was before the government started pumping in cash in every different way that it could, with PPP, with direct checks, with economic stimulus, with bank policies funded by the Treasury and not the Fed, and all of those kinds of things. So it was my opinion that the fund did the right thing up front, but should have very rapidly understood that assets are going to increase in value. And so at the end of the period that they had announced, they did make redemptions available, and they sent another shareholder letter saying, even though we haven't been right, we're going to double down on this. And so they let you redeem. That's no problem. So I moved all my money out as quickly as I could because they're doing now only debt deals. They're not doing any equity deals in the multifamily space, that sort of thing, with the concern that maybe they would be overpaying. That's a valid
Yeah.
concern in an inflated environment, of course. But they have tremendous buying power, and there are deals out there. Other people are finding those deals, and so it was my opinion that we should not be doing that. So I pulled all my money out, and I have invested probably 30% of that into syndicated deals, my own little version of a hedge fund.
Yeah.
And I'm looking for deals on the other side as well, because I think now, if you can find the good deal on the equity side, now's the time to do it. And even better, I love debt equity hybrid deals, and I'm finding several of those.
Uh, by the way, some Godfather from the chat. I love the names that people have on the internet. It's so different from real life. It's probably his name is Norm. So
Right.
Godfather in chat says, so long as the Fed is pumping liquidity, the market won't crash. I agree. And I would also say, as long as the interest rates are so low, the valuations are through the roof. So as long as they don't charge, the interest stays low and they keep pumping liquidity by various means, such as buying junk bonds or basically, sending straight up cash. However, tell me if you think, I think that as a marathon mentality, the Fed can't keep up with the market. At some point, the shop has to close. You know what I mean?
Yeah, this is my fear. I mean, and it's also very interesting. I don't want to go too deep into this, but it's very interesting. So in 1954, Dwight Eisenhower signed an agreement with the Fed that said to the Fed effectively, I'll get a lot of these details wrong, but the broad strokes will be right. it said effectively, the Fed will now loan us money. We won't print our own money. It'll be the Fed who does that. Um, Trump reversed that memo in March of last year. Okay. Now, what he didn't do was to say to the Fed, you stop doing that. He simply said to the Treasury, now you can do it as well. Right. So we now have two entities that basically can print money and fund investments into hard assets on behalf of the U.S. government, as long as it is in public policy interest. Now, here's the super interesting thing to me. At the same time, the Fed began to stand up additional funding vehicles to buy assets that the Fed has no business buying whatsoever. Like to your point a minute ago, junk bonds, right? They can buy pineapples if they want to. If there needs to be price support in the pineapples or milk, right? Or sugar, the U.S. is historically very supportive of those two industries. Now they can use the Treasury and the Fed to do those two things. So, the feeling there is, or the emotion that I get on that is that there's now sort of two unlimited pockets, but we know that they aren't unlimited. We saw that those of us who lived through 2008 saw the terrible nature of what happens in a credit crunch. It wasn't that there wasn't money out there. It was that the people who were turning the faucet on refused to turn it on for a short period of time. And the entire world economy had the chance of slowing down and stopping. And that's why they came out with TARP and all of those kinds of assets. So their ability to be creative seems to be endless. It just really needs to be a conversation at some point is how much of this can we kick down the road? Because in order to pay the debt off that we're accruing now, we don't want to pay it off in today's dollars. We want to use the hack that's built into the system, which is inflation. And, how much inflation are we going to saddle? People always say, my grandchildren, no, it's Generation X in retirement. How much of inflation do you want to saddle yourself with in 15 to 25 years? Unfortunately, it's really hard to say no to the hamburger today versus the hamburger on Tuesday. Yeah.
That's such a good ending. I love that example. That analogy. Sorry, in Russian, I confuse it. It's a different language. I mean, example and analogy. Anyways, I think it was a brilliant recap. Speaking of market crash potential and artificial support, unrealistic pricing, whatever. I always ask this question. All my smart guests. Sometimes I have less smart guests and then we talk about other stuff. But I mean, the smart people, like I had Daniel Priestley here on the show. I asked him the same question.
Yeah. Super smart.
Yeah, Daniel is he's in your level. By the way, shout out to the 1.2 thousand people in the chat. People are going through. I mean, people like you.
Awesome, good.
So I asked this Daniel Priestley. Which camp are you on as far as Tesla? Do you think it's overhyped, overvalued, or is this misunderstood and undervalued?
Okay, this one's an easy one. Tesla today has a market cap greater than the other 9 largest auto manufacturers on the face of the earth. So what we are saying, I put this in my newsletter yesterday, and anybody that wants that newsletter, Tom, if it's okay, just go to plantyourflag.live. And I just keep these thoughts and these little notes that I take from interviews and that sort of thing. Plantyourflag.live.
Is it one?
You can get
one
it
sentence?
One sentence, yeah.
Okay, plant.
Dot
I'm
live
gonna put
is
it
a
in the
domain.
chat.
Okay, plantyourflag.live.
Okay.
And so, what we see, and I put this in the newsletter yesterday, is that we are basically arguing that the net sum of present value net sum of all revenue, all profits, all numbers that Tesla ever collects in its life, and let's assume that's 100, 150, 200 year life, is going to be greater than the exact same contribution of the other 9 largest auto companies in the world. And I think that nobody would look you straight in the face and say, yes, they're going to make more money than everybody else combined forever. What we're really saying is the greater fool theory. I think today I buy it at $150 a share, but Tom, tomorrow you're going to buy it at $160 a share and I'm going to make a little money on it. That is the textbook definition of speculation. Mm-hmm. Now, here's the thing. I know that, and I put 6 figures in the market last month, right? Because I don't think we're close to the end. I just can't time the end. So I'm just trying to do this, just little bits like that. So every time I put an investment in, I set a target return. Once that target return is hit, I pull the money back. I may miss out on some other gains, but I get my 8%. I got 8% last month. That was good enough for me on six figures. 8% in, pulled it back. Then I wait and see, can I do it again? If I only do that twice a year, that's better than I deserve in the stock, if we're talking public equities.
So, by the way, the number is already at 1.5 thousand viewers. And I have to let you know that because I'm very super bullish on Tesla. And, that's why I brought you on, because we disagree on pretty much everything. But I really love listening to you explain your position. It's almost like it's so rare these days to hear people just, talk and not scream at echo chambers. So, because I'm super bullish, you have to understand my audience is also kind of on the bullish side. So they're saying in the comments, they're saying that what about the fact that Tesla is not, caps, a car company? There's a lot of comments. Basically, if I'll just paraphrase what they're saying here, just to give like a one comment instead of all the ones. They're basically saying, well, you have to take a look at what Chamath is saying, the energy storage distribution decentralization business. Is that real? How far along is it? Like, what do you think about that side of Tesla?
Well, it's like saying that Walmart is a logistics company. It's very true. Of course it is. The best logistics company in the world, better than FedEx, which is literally a logistics company, right? But at the end of the day, do they get paid for logistics, or do they get paid for what they sell? And in my opinion, Tesla gets paid for what it sells. And I think it's a fabulous product. My son and I get on every day, design a new Tesla for ourselves. And we haven't bought one yet, but we do that all the time. I think it's a fabulous product. I think the CEO is absolutely fabulous. I follow everything he says. I think he's funny. I think he's engaging. He was very boring when he was on Clubhouse until he had somebody to pick a fight with, right? Because that's his personality. But at the end of the day, they have to sell millions and millions of units to justify the valuation, with typical valuation terms that we apply to other companies, but they're getting a pass on it today. I used to fear that I didn't buy a Tesla up front because I feared that the company wouldn't exist. I don't fear that anymore. I think that they are super smart. They've crossed that threshold. They've jumped the chasm now. I think that they're going to stay around in the future. And my next car will probably be a Tesla. And that means that I'll see another 15 or 20 people do it in the next 12 months as well. And that all adds up to that. But when you take the net present value of all future cash flows, is it the fair number today? I have a hard time with that piece.
I guess at the end of the day, you either are a believer in the insurance business, the robotaxi, the distributed energy. If you are a believer, if you're part of that camp, then it makes sense. And if you're not, and if you just say, well, as a car company, definitely don't make no sense. I think even the bulls agree with you on that. If you just look at it as a straight up car company, it's definitely not there. But I'm part of the camp that kind of sees the vision. And at the end of the game, it just it's a matter of opinion. By the way, speaking of Teslas, they're such great cars. I mean, oh my God. I mean, at that price, you're getting a car that's pretty as fast as a Ferrari, drives itself, doesn't waste any gas, doesn't break down. There's no oil, there's no dirt. It's just like, why would you? I had a friend who bought like one of those shitty Italian cars, the expensive bullshit ones. I was like, why? What's the point? I mean, this thing has 4 seats and it's like super comfortable and will drive as fast. I mean, I don't understand people who buy these shit.
No, I'm not a car guy, but I have a friend who is. And literally last night we were texting back and forth, and he said he compared it to some Porsche, and he said this Porsche does this and it does this and it does this, and Tesla's doing all of that for a third the price. So
yeah, they don't have
I think I will own one this year.
There's no dealerships.
They have no dealerships.
Yeah, it's so convenient. You go online, you customize your ice cream, your Tesla, whatever. So enough about Tesla. It's not a Tesla interview, and definitely, I mean, it's a fair opinion, and I wanted it to be heard because people mainly hear on my channel like the good stuff about Tesla. I want like to hear what I would say an honest centralistic opinion, because I don't think you're bearish. You're kind of centric on this, in between.
We do have Tesla in the portfolio, by the way.
There you go.
Because one of the things that I told my broker who was executing the trades and the strategy that we chose January the 12th, was let's pick the 100 companies that we know will be here in 100 years. And so we went through and we had debates on not all of them, but lots of them. So we didn't debate Amazon. We didn't debate Apple. We didn't debate Tesla for that matter. We debated eBay. Will there be a need for eBay? eBay is really not very distinguished from other buying marketplaces anymore. They're just sort of being carried along by inertia, no product innovation whatsoever that I know about, no customer service to any extent that I know
Yeah.
about. We bought Airbnb. We had that. I was an early investor in Airbnb, so we had some of that already, but we bought that because we think that is the world's largest hotel chain. That isn't thought that way, but that's what it looks like.
Yeah.
It has number and valuation issues the same way maybe Tesla does. Absolutely, it does.
More.
Um, maybe so.
The
They own
valuation is
no
crazy.
inventory.
Yeah.
That can be tricky. There's political overlap with them as well, which comes into play with a lot of these things. So anyway, I just wanted to say that I don't want to get onions thrown at me. I own some
No, I'm
Tesla,
already getting
not
onion
much, but
thrown at
some.
me. We have some Italian people in the chat, furious.
Oh no.
I'm sorry. I love Italy. It's like literally the best country to travel in.
Oh
The
yeah.
food is amazing. The culture is
My
amazing.
wife and I would move tomorrow if we
Italy,
were in
yeah,
a position to do so.
like
Yeah.
Lake Como, like a high on like it's beautiful,
Yeah.
amazing
I'll
country.
tell you this to make your Italian listeners feel good. I lost my brother in October of 2019. And I came home from the funeral and I sat the next day and my wife looked at me and she said, "Do you need to go?" And I said, "I do." And I got on a plane by myself and went to Rome for two
Wow.
weeks, right? Because Rome, that's my spiritual home. And I did nothing. I wore out a pair of shoes. I threw them away on the way to the airport, just walking the streets of Rome. So in my heart, Italian right there.
Here we go. So Trey, another question I always ask my economist and investor guests: what the hell is going on with Bitcoin? Speaking of Tesla, I mean, what do you think of the move that Elon did with Bitcoin? And rather, I'll divide the question to three: Elon and Bitcoin, Bitcoin in general, and cryptocurrencies in general. So that I guess that's three separate questions.
Yeah, I can answer you in one statement. I don't understand crypto. Fundamentally, I don't understand what makes it a protectable and investable asset. This is a limitation, a mental limitation. It isn't that I've gone down the road and studied it and decided not to understand it. I fundamentally don't understand the core investable proposition, except that it is manufactured scarcity, which does make sense to me in some opinion. So I've been in lots of clubhouse rooms with people that I really respect saying, "Why do you invest in crypto? But don't tell me because it's going to go up tomorrow. What's the core investable thesis?" So for gold is humanity's historical store of value,
Yeah.
right? Second from that is real estate. We pretend that there isn't any real estate, but there's tons of undeveloped real estate. But real estate is a store of value. The best argument that I have heard was from Brad Hart, who you've seen on Clubhouse as well. He does a lot
Yep.
of mastermind work.
Yep.
And Brad said it's the best store of value because it's borderless and not subject to political restriction without a lot of coordination. And so I thought that was really interesting. So I said to myself, and this was 4 weeks ago, I'm going to pay attention to Bitcoin now just to watch what happens to see if this is right. Well, it was $28,000 that day, and it's what, 50 something thousand today. The fact that Elon moved some of his cash holdings, 7% of his cash holdings into Bitcoin was very interesting to me. I think Apple is next. I think they're going to do it. And I think they're going to accept Bitcoin in transactions, which will make
Yeah.
it even more important. And then third, I just heard, this is a rumor, so I don't want to quote this at all, but I just heard today that Morgan Stanley was considering moving 15% of its $1.5 trillion cash account into Bitcoin. Why? I think it's because the inflation curve that we talked about previously. If you can catch the benefit of that inflating asset today to use as an offset of a deflating asset, which is inflation in reserve
Exactly.
in reverse tomorrow, that's probably a good investing strategy. So last night I opened a Coinbase account and
Oh
I
my
put
God.
$1,000 into Bitcoin.
Is it your first? Your first crypto, right?
My first. Yeah.
By the way,
my
they're calling
first.
you and me boomers in the chat. I don't think they understand the definition of boomers. That's not the right. That's not the right decade.
That's
Because
okay. I was young and stupid once myself.
they call us boomers, and they're saying we have a. I mean, a lot of people like crypto, including myself. I mean, I said, tell me if you agree with me. I did a whole video, and I think it was titled, "Why the hell did Elon buy so much Bitcoin?" And my thesis was very simple, and I said, Elon did it for three main reasons, the way I understand it. Reason number one being what you just said: replace a depreciating asset with an appreciating asset, because at the moment, cash loses value every day. Bitcoin pretty much goes up. Number two, I said, that's his way to force the system to set up an infrastructure to handle cryptocurrencies so that it can actually start charging for automobiles and put crypto in the system. And number three is, I said, I think it's a hedge against a potential crash, and I got hated for that because people said, well, Bitcoin is correlated with the market crash, which I don't think so. But people have been bringing up March and basically how everything dipped in March, including Bitcoin. But I would say that's not a test case because of how unnatural that was. That wasn't like a market crash. It was a cataclysmic global health event. And anyways, we can argue about it, but I honestly agree with you on that sense that it is an appreciating asset. However, here's what I want to ask you. And this one thing I said in my video. I said Bitcoin, in my opinion, whether you believe it or not, whether you think it's a commodity or a currency, at the end of the day, if we're going to have this conversation in 10 years, I believe Bitcoin is going to be much higher than it is today. However, that pathway over there is going to be, I gave the example of somebody going to Cuba to smuggle guns, getting arrested, getting rescued out of prison, swims to shore, almost dies, gets resuscitated, gets back on and it's going to be something like that. It's not going to be like this stock line. It's going to go to 0, it's going to go to 5, it's going to go to 100. It's going to be total craziness. But if you're willing to wait 10 years and let it cook for 10, 15 years, I think that you're definitely going to see it because of the scarcity. Just straight up on the scarcity side of it, it has to go up. But again,
now
nothing
the
would
other
surprise me about crypto.
No, exactly right. But I do like the Bitcoin model, which is built-in scarcity, and then there's also a second layer of scarcity built in as well, right? Which is all of these lost coins. I don't know what the industry term for that is, but sort of if I can't remember my password to get into my account, then I don't get access to that. Although I did hear that the Bitcoin board or whoever makes decisions for blockchain, crypto like that was sort of beginning to say, well, maybe after, a year, if you don't claim your Bitcoin, then or 3 years or 10 years or something, we put it back into circulation. But I don't know the basics behind that. And it seems to me
you heard about the guy who lost,
stupid
I think in the garbage disposal, he threw away the computer, and there was some insane amount. You heard of that story? He was trying to dig it up.
No, I haven't heard that one. I heard a guy bought 20 on a bet. He was betting someone else that it was a real investment. He bought 20 Bitcoins. They were $800 a piece or something. It would be worth, millions, $10 million today. And he can't get to it because he knows it's in the wallet. He can't remember his password or his encryption or something of that nature, so he can't get back into it. Yeah.
I'm going to show you something really cool if I can share it on my screen. Okay, so check this out. Can you see the screen on your end?
Oh, wow. Yeah, I see it.
So this dude, I think he either him or a family member threw out a computer which he thought was the old computer. And the amount, as you can see here, 280 million in Bitcoin. And he was asking the city hall, basically, or the city, the mayor, whatever. He was willing to give them, I think, a certain amount if they let him dig through basically dig up the garbage place, whatever. And they wouldn't do it. They wouldn't budge. He offered them 7,500 Bitcoins.
Wow.
That's insane. So,
this is like,
check out this paragraph.
Treasure hunters.
Look at this. How was offered to donate 25%.
Yeah.
They wouldn't do it. How crazy is this?
That is crazy. It's like these treasure hunters that go to the bottom of the ocean and they pull the ships up and then they get to have the money, but they have to give half of it or 25% or something. It's the same thing.
By the way, shout out to the 1.7 thousand people in the chat right now. How many people sneak to this garbage dumpster place at night trying to find
Look, you could ask me a lot of hard questions. That's not one that I'm going to know the answer to.
So I want to ask you. By the way, somebody asked a question in the chat. I think it's really cool question. Chaos Scrum, that's a weird name. Trey, how fast can a market crash happen? And a lot of exclamation marks.
Well, if we look at it from a historical standpoint, a crash, I think, is typically determined by a 10% loss of value that doesn't recover within 48 hours, right? So that's sort of the textbook definition of what a crash is. If you want to know the bad news, the S&P crashes on average every 1.8 years. Okay, so It hasn't been the last 1.8 years. So do we get to double down on that? I don't know. But, I think some people will call that a correction if you take a longer
Yeah.
view of it, right? It's just a correction. It was a buying opportunity or something of that nature. So can it crash in one day? If you use that measurement, then absolutely it can, and has many times before. Is it going to go to zero? No, it's not going to go to zero, right? Is it going to go back to $2,000 Dow Jones like it was when I was a kid in 1987? That's about what it was worth at that point, No, it's not going to go there either. The best book you can write right now is Dow 60,000 or
Yeah.
Dow 100,000 or something, because it goes over time. And why? Because we keep pushing assets into that. Do you know there are 33% less public companies today than there were publicly listed 10 years ago?
I had no idea.
Scarcity. Yeah, that's why the huge rush to get these companies IPO'd. It was a reaction to the internet bubble when anybody with a face and $300,000 could go public, on no revenue, no earnings. The things would balloon up because of emotional demand.
Yep.
Irrational exuberance is what the Fed chairman called it back then. And so that's why it's so hard to get a company IPO'd today. We're seeing them go. I have 4 companies that I hope IPO in Q1, and I haven't seen those announcements. I'm not on the board. I don't get privileged information, but look, I am sold on that model. I want them to be able to go IPO.
Yep.
The entire SPAC movement, people are saying, oh, it's a fad and it'll go away. It won't go away until IPOs are easier to do. It literally is easier to go raise $100 million because money is plentiful, to go find a company and buy the public company as a way to go public than it is to file the paperwork and go public through the normal traditional channels. That's what we're seeing there. That's an innovation that we're seeing there.
It's kind of the thing with IPOs, and I talked about this on my channel as well. It's really good intentions over the years and adding more rules and adding more requirements, more scrutiny, more regulation. At the end of the day, it gotten so convoluted, so complicated, so costly to go public through an IPO that the market created the solution. I mean, it just was inevitable. I worked for a Reg D fund, and it was exempt, and we had filing cabinets in literally half of the office space and we were not even public. So I definitely think it's gotten convoluted. And if you take a look at SPACs now, the problem, and tell me if you agree or disagree with me, that this lack of scrutiny, so to an extent, the speed, the ease of access and whatnot, have created this situation where I can literally say, well, I want to do an electric vehicle. Here you go. Here's $500 million. Pretty much that's what's going on right now. And people are losing their pants on these. And I really fear that there has to be some regulatory fix to this thing. It's way too easy. I mean, I'll give Nikola was a good example of a company that should never go public at that stage. Maybe 5-6 years later, they were not ready, obviously. I mean, there's a lot of other examples.
Yeah. So one of the things that, that these direct public offerings or SPACs or that sort of thing, if you don't go through the traditional channel, you are cutting out other people to be able to make money on the success of your company, right? And you may laugh all the way to the bank. That's possible. But if you always involve other people in your deals so that they have a vested interest and you have a vested interest in the long-term success, even the midterm success, then that can benefit you. So for example, I don't know if you saw Michael Klein, he's done 2 of them. Yeah. But one of them, he spent $25,000 on a clean public shell. And it wasn't even really clean. It was clean enough. $25,000.
Clean enough.
He raised $100 million. I think it was $100 million. It might have been $200 million. And he merged with MultiPlan, which is a healthcare company that goes around in all the local doctors' networks. It consolidates all of those and then rents the entire plan back to the health insurers, right? So a fabulous business in itself. They merged at $11.1 billion. And the organizer of the SPAC receives what is called the promote, which is 20%. Okay. So 20% of $11.1 billion with fees and bonuses and warrants. Klein received 92 days after he spent the $25,000, $273 million for making that happen, right? The only thing it really did was to put $100 million in cash in the bank for multi-plan,
Yeah.
right? And I think he even got a board seat or something of that nature. There was no real economic value created there, but there was economic value created for him, 20%.
That's a fast. That's a fast return. I mean, but speaking of lack of value, and you mentioned earlier the greater fruit theory, and I think do we have you for 5 more minutes, Trey? I know you have a 2 p.m.
Mm-hmm.
I'm
I
on.
have a two.
I'm.
Yeah, I'm good.
I say Eastern time, so I think you're in Central time. So for you, it's 1 p.m., right?
No, I'm Eastern, so I have 15 more minutes.
Okay, good, good, good. So we'll we'll,
Yeah.
we'll do it at 10. We'll do 10 more minutes. So I'll ask you a question, then we'll take a couple questions from the audience. So you mentioned the
Okay.
greater fool theory. You mentioned we just talked about it here. So here's the way I imagine the market right now, and I've talked about this. There's some sort of a pyramid scheme mentality to this thing. So there's people who are in the market right now, and they're expecting new bus drivers, bartenders, gardeners, teachers to come in the second wave. They can purchase the share for higher. Then the new noobs come in a month later. The new noobs come in a month later, and at some points we're gonna run out of noobs. You know, out of these noob investors, and somebody's gonna be left holding the bag. And this is really unfortunate. This is what scares me about the way this is. You just mentioned, right? Completely speculative trading. Well, I'm buying this because I think it's going to go up, not because I think there's a fundamental value here. Which is, by the way, something I preach against on my channel. I only talk about value investment long term. But I mean, how does this not end badly if all people do just speculate and speculate? I just saw some guy on the internet talking about, well, I made this and I made this and I saw this drop 100%. I got out in time. Yeah, but somebody lost. It's a zero sum game. I mean, it's not like
Yeah.
we're creating value here. You understand? We just
No, I completely agree with you. I think one important thing to look at though, Tom, is as we look out 15 years, 20 years, that as a time horizon, you have the baby boomer generation, which was the largest generation in American history, come into retirement age in the past 3, 5, 7 years, right? They in retirement age, whoever the spender is, whoever's holding the checkbook, typically is buying a second residence, a vacation residence, in some form or fashion. At the lower end of the spectrum, it's a timeshare. Slightly up from that, maybe it was an RV, right? Slightly up from that, maybe it's a lake house. Up from that is a beachfront condo, beachfront house, that sort of thing, right? So you have that spending wave going on anyway. Then you have little ignored Generation X, which is my generation, right? Who gets screwed on the front and the back.
yep.
But we're still here and we still have to own homes. We still have to make investments with what is left over from us. We are historically a depressed earning cohort of generations because we came into the workforce during a prolonged recession. So our raises that we got compound on the low wages that we first got, that sort of thing. So that's a demographic pyramid that we've got going on. And then the millennial generation is coming in, only slightly smaller than the baby boom, very slightly smaller. And some people, depending on how you define the years of the generation, think that it's even bigger. Well, they got screwed coming into the market as well, right? Because they were very, very late to the party. They're 11 years later to most major economic life decisions than previous generations have been. They get married later, they have kids later, they buy houses later. Well, guess what they're doing right now? They're buying houses. They got married a couple of years ago. They're buying houses now. They're having kids now. The life insurance industry is missing the boat right now by not marketing solely to millennials. They don't know how to communicate with them. They don't know how to market to them. It's a tremendous miss right there. So what's going on there? Those millennials are going to follow the same buying cycle throughout their generational life as the rest of us have. And so they need the stock market, again, to keep going up and to making returns and all that sort of thing. So they will continue to put money into the stock market exactly the same way the boomers did. Generation X had to do it differently, but now is also established well enough that we're putting money into the market as well. So you see that pushing up on real estate values, pushing up on it's competition for assets. And we don't have enough assets in the public market. This is my continuing thing. If the housing market was a sure thing forever, like people want to believe that it is, wouldn't you think that month over month housing starts would be growing by 20 or 30%? They dipped in November, December, and January. So we should be building more inventory, and we're not. We are, but not to catch the market demand. So I think demographics is a really good place to start. There's a guy that I love. His name is Peter Zehan, and you can find his stuff on YouTube. And he's the greatest demographer. He makes it interesting when he talks about these kinds of things. And P.S., just as a little end note for him, he says if you look at every country around the world, and he's got charts for every single one of them, the U.S. is the only place you want to be for the next 20 to 50 years.
Yeah. By the way, somebody is supporting you. Taco Friday says, no crash. Listen to him. I don't know how he figured that you said no crash. I don't think that's what Trey
I'm
meant.
not sure that either.
I think
I think what I said can be true, and there's a crash as well. Okay.
So here's a question from the chat. We probably have 5 more minutes, so let's try to get 1 or 2. Somebody asked, Trey, do you think that IPOs and SPACs are sort of a scam because only the wealthy and the privileged have access to the early pricing level, and while the rest of us are battling through the scraps? Like, I think he's talking about the retail investors.
Yeah, I think it's a really good point. And I think the retail versus the institutional investors and the high net worth investors is a real thing. I think this entire Reddit GameStop fiasco with Robinhood in there, I think it was a real uncovered thing. Look, I got shares of Airbnb at the IPO price because I'm in the private wealth group at Morgan Stanley. Is that fair for other people? It is most definitely not fair. There should have been some sort of auction for it or something of that nature. There wasn't. I simply emailed my broker and said, are you getting any of these? I'd like them all. And to my knowledge, I got all of the allocation that he received from Morgan Stanley.
Yep.
So I don't think that's fair, but I don't think life is fair. And I think you have to make your money where you can make your money. I don't apologize for making it where I can make it. But if I didn't have it here, I'd go try to make it somewhere else. And then I'd play the same game that people who have built fortunes have played forever. The other thing that I think is easier now than it ever has been is you can get a Robinhood account. You can get a free trade account, that's not really free, because if you understand how Robinhood prices for free, you're not getting the best deal there. But it's such a small sliver that I think it's a good deal. 20 years ago, we couldn't do that. I remember when, I don't even remember who it was now, but it was like Charles Schwab or something came out with a $20 trade. Yeah. And everybody went crazy. It was the best deal in the world, because before that it was a percentage of the value of the trade. And
now it's outrageous.
That sort of thing.
$20 per trade, people are going to go berserk.
Nobody's even charging that anymore. You get fired if you go out of business if you did. Nobody's charging for trading anymore, hardly. So I think that the retail investor has some tools and some abilities now, but the game it's a casino, and the game is stacked to the house, and the house has to keep the high rollers coming in.
That's true.
If they don't, there's no casino. If you don't sell out the first 6 seats on an airplane, that plane loses that flight loses money, no matter how full coach is. Same principle here, Tom.
Well, the difference between the first 5 seats and the last 5 seats can be 100 times more or less, give or take.
Sure.
By the way, I spoke about it on my channel, and I specifically said, hey, just so you know, in Robinhood, and not specifically Robinhood, but every zero commission platform, you are the product. I just thought straight up, you are on the shelf. I mean, information, your patterns, everything is being sold off. It's not like it's free. I don't believe in free. There's nothing free. You're paying a price one way or the other.
If you can't spot the patsy in the poker game, you're the patsy.
You're the patsy. Yeah. Okay, so we have 2 last questions. Let's try to get it quick because both of them are really good. First one, Bach Nesty Bowl. These names. He's asking which kind of books you recommend for investing.
There is a book that I absolutely fell in love with a couple of years ago. I just assume that everybody has read Rich Dad Poor Dad. Okay, it's a not well-written book at all.
Robert
but the principles in the book are Kiyosaki are fabulous. And I heard that Kiyosaki was on Clubhouse the other day, but I didn't see him. And when I searched for his name, I didn't see it. Sharon Lecter is, and I've spoken to Sharon many times. So I assume everybody has read that book because I gave my 11-year-old that book for Christmas this year, and he's already read it, right? Okay, so I assume that. The second great book that I'm in love with right now is called The Dondo Investor, Dhando, The Dondo Investor. It is a Gujarati Indian who says, your returns do not have to correlate with the risk that you take. And then he makes, which is something that I do not think is true. and then he proves that he's right and I'm wrong. And I have loved that book. I've read it 3 times since I bought it a couple of years ago.
Here you go, ladies and gentlemen. I'm not gonna interact with because we have minutes left. I want to get one more question. Somebody really important question for my viewers. Lou from the chat, Lou Fix, asks, how much should you hold in cash right now, given the potential crash or pullback, whatever?
I'm probably the wrong one to ask because I don't think I ever have this answer correct. I don't ever want to hold cash at all except for what I need in the next 30 or 60 days. I have to really build in a discipline into my businesses, into my household account. I see a number right now this morning when I checked balances, and it's burning a hole in my pocket because I want it invested and working and that sort of thing. Having said that, most family offices, which are the ultra high net worth individual investing arms, are holding, according to the last report from a couple of weeks ago, about 23% in cash, up from 15.
Yep.
Okay. So why are they doing that? Without a doubt, every business deal that I have presented to investors in family offices, they've said, this looks really good. We're going to wait. Because they know that something is coming, and the person that has cash in 2008 has a lot more cash in 2020,
Yeah, exactly.
and that's what they're looking for, a replay here.
They want chips when the party starts.
They want chips to play with. Yeah.
Yeah.
That's
Okay.
right.
Listen,
I had friends that bought
$500,000
homes for $31,000, for $19,000. That's what. Yeah.
There's the whole story about the Detroit homes. The $1 homes. The bundles.
They were paying you at some point to take homes in Detroit.
Yeah, I know. I had a guy who did the whole distress fund of around the time in Cleveland, Ohio, also. So, listen, we have.
So I've seen 5 distressed asset funds published in the last 5 days.
Yeah, everybody seems to, okay. Listen, it's too long of a discussion for 2 minutes. I want to allow you time to drink a cup of water. Thank you so much, Trey, for staying all the way, literally until your next meeting. And I appreciate it. You could have pulled the plug about 15 minutes ago, and I would be fine with it. Thank you so much. We appreciate it, guys. If you want to check out Trey, his link is. Do you have social media where people can follow you and Twitter or something like
that? Yeah. So my LinkedIn is Trey Taylor JD for my law degree there. My Instagram is Trey Tay123, so you can follow me there, and my Twitter is Trey Taylor CEO. We are in the process of rebooting all of that to support my book launch, which I will pitch right now, if it's okay with you, Tom.
Definitely. We should have said it at the beginning.
Okay. So I have a new book that published November the 21st. It's called A CEO Only Does 3 Things. You can find that at Amazon. The point of the book is to give a job description for CEOs because there isn't one. And I think most CEOs, if not all of us, are doing the wrong things at any given moment, and we should be doing the right things. And so I have that book. And then my newsletter, plantyourflag.live, you get all of these kinds of thoughts from time to time on that.
And every single link you just mentioned, I'm going to put in the description because I will upload this as a video. Once the stream is not live anymore, it's going to be uploaded as a video. I'm going to put all the links in the description. So if you're watching this on the replay, or if you're watching now, you want to go back and check out all this stuff, you can go and get it from the description. Once again, Trey, thank you so much. I appreciate it. You've been one of the best guests we had on. I just want to ask you before you leave, I'm going to put you on the spot. I want you to come back and talk about your book because we didn't even talk about that.
Yeah, sure. I'd be glad to do that. I'm doing a lot of podcasts right now for that. As a matter of fact, that's the meeting I have to bounce to, is a podcast about it.
Done. So I'll have your people coordinate like a round 2 to talk about the book.
Okay.